Okay, so this is the volume profile low volume node approach using the current machine learning model, which is Red 55. I just wanted to take a look at this real quick. I was just running a test here before I publish this out to the members, and we're going to review this today in detail. But I wanted to point out a couple things. This is just running last Monday. So you'll see that when the bar goes orange, that's what that means is the system is going to make a prediction on that bar. Okay, so we're using the volume profile to decide when to predict, and we're using the low volume nodes to decide when to predict. And those rules are pretty simple. If you're at an edge, value area low or high, then it'll make a prediction. Or if you're at a low volume node. The low volume nodes are drawn on screen in time as the bars draw, and I'm drawing the closest low volume nodes to the current bar. So if you'll notice here on this bar right here, there's an orange bar right there, an orange line, a low volume node formed right on this bar. It used to be down here. All right. And then it just kind of stuck around because there was no more trading, right, in that area. All right. You may see a red line below price, and that's the nearest low volume node that's below price. Because that's what I'm tracking. In real time, you'll see the yellow dashed line show up from the volume profile study, and then right on top of it, if it's the nearest low volume or high volume node. I'm sorry, if it's the nearest low volume node above or below price, then you'll see my study kick in and draw right over it. So you'll notice that this spot right here became a low volume node. This is a legitimate place to start to look to make predictions and look for entries, but you'll notice that these bars are not orange, and the reason is that there is a restriction that says you have to be far enough away from the point of control. All right, so this is how we avoid staying out of trouble. We want to stay. We don't want to enter near the point of control, since this is where most of the volume has occurred. We don't want to get caught in that chop. Okay, so what we want to do is find entries that are far from the point of control and then drive towards it, or if you're in price discovery mode, drive away from it. Okay, so here we get far enough away from the point of control. We're at the low volume, the value area low right here. So these bars go orange, and you're starting to make predictions. You actually make a 151 here, which is a failed break. The break lower is going to fail. That's the prediction, and it's exactly correct. It happens to be just the market skids a little too far before turning up. We require an up bar to enter. So we would be entering on that bar, but in this case, it's too many bars away. But I like what I see there. That's exactly where I want to be looking. All right, because what's going to happen here is basically you're gonna find support and drive back to the point of control, which is what happens here, or you're breaking out of the value area and you're in price discovery mode. And so typically what you see is you'll break out, and then if it's one of those days where it's just going to run, it just off it goes. Or it starts to build volume. So it'll break out and then go sideways. So we're going to talk about that, what we do about that in just a minute. Okay. So in this case, we pull back down to the value area low. Let's look at these two bars right here. These bars here are really interesting. This bar here is orange. That one's not. And you may ask yourself, well, why not? It's at the value area low. And it happens to be between two bars that are orange. It seems like it ought to be orange. It's not, because you're kind of right at the threshold of being far enough away from the point of control to make a prediction. In other words, the value area low is really close. This distance here is really close. Is really close to the point of control, and so getting down to the value area low is not that meaningful now. You have to be 20 ticks away basically for the system to say, okay, you're allowed to trade. And as it happens, this bar closes more than 20 ticks away, but that one closes within 20 ticks of the point of control. And so that's why it looks like that. Okay, it might look a little odd to you, but you're right at the edge. Up here, you'll notice you don't have this problem, right? You get up to the value area high, and as long as you're near it, you're making predictions. Okay. The predictions that we're making are the same rational trader price pattern predictions that we've been doing in production for quite some time. Okay, so I get to this bar here. I go orange because I'm far enough away from the point of control, and there's a low volume node right there, and I make a prediction, but there's actually nothing to do on that bar because there isn't a rational trader price pattern behavior that we're going to predict on there. All right, we would have predicted on this on a pullback. Here, it's too late, you missed it. Same thing here, same thing here. As we get up to here, now, okay, you're going to get predictions on that bar for sure. That's a reversal pattern. All right, and then that's like a pullback, and that's a pullback. So now just kind of the normal, once the bars go orange, the normal behaviors that you're used to seeing kick in. All right, and that's controlled in the study with a new setting. And this uploaded last night, so next time you log in, you'll have the new versions of the studies. We're going to look. You'll have this study now, which is TRT low volume nodes, and you will have a new TRT ML predict, which has a new option here in the prediction for user-defined behavior. Okay, so what I'm doing is I'm taking the mechanism that I have in place that allows you as a user to define when you want to enter or when you want a prediction, and I'm combining that with the rational trader behaviors. So this now says no, yes, and with TRT. No means just running like you normally do now with all the rational trader behaviors, regardless of location. You know, yes means that it's going to use your user-defined behavior. And with TRT means it's going to use the user-defined behavior that I've specified here, but it's only going to make predictions based on the rational trader price patterns or price action behaviors that we've defined. Okay, so ID36.SG1 is what's controlling whether this bar turns orange or not. And when it turns orange, then because that says with TRT, the server will go, all right, I'm going to predict now using normal rational trader price action behaviors. Okay, because of that, if you want to run this system, you also have to download a new server. Okay, so that's going to go up this weekend as well. And I'll specify all this in the email, but a lot of times, you know, every week you're used to downloading a new model. That will be the same as well this week. And when we have a change like this, often it's just the chart book that you have to update, or you have to download a new chart book. This time, if you want to use this chart book, you need the new server. Okay, the installation is really easy. It's just replace the old one. If you don't want to use this yet, then you don't need the new server, so don't sweat it. The old everything. It's all backward compatible. The old one will still work. If you put the new one in and you want to use the old chart book, that'll work. It doesn't matter. The only thing that won't work is if you try to do this new chart book with the old server. It'll complain. Okay, it won't give you bad answers. It won't give you an answer. It'll tell you this. It doesn't think things don't match, and it'll error, and you'll get no trades. Okay. All right. So what I wanted to show here was, if you look at this, what you can see is, okay, yeah, this is where I want to be. I want to be making predictions here. I like this location actually. All right, now the market goes sideways here, and in fact, it goes sideways so much that the point of control changes to that location. Okay, so we're going to talk about this sideways behavior in a minute. Let's continue here. Here again, we we very briefly get far enough away from the point of control and close enough to the value area high to make predictions possible, but you know, we bounce back in and just can't do it. Here we get far enough away. All right, so now we can go. This area is you're near the value area high, but then you're now far up here. You're far enough away from the value area high that I won't make a prediction now. I need a low volume node. Okay. So I'm going to make a prediction at the value area low, the value area high, or any low volume node anywhere. Okay? With the restriction that you can't be too close to the POC. So really what we're doing, and it's not shown here on screen yet, we'll see it shortly, is that when you get outside the volume area, you don't have anything to work with in terms of who's been here before and how much trading has occurred. There's no volume yet. And so this is where we want to be careful, and we're gonna start using the wave delta chop avoidance if you choose to. Okay, that's why these blue stripes are here. They're applying up here to these bars because we got outside the volume area, the value area, and now I want. If I start to go sideways, I want to use my wave delta chop avoidance to stay out of that. Okay, so that's what's happening here. Is that the previous peaks here? Where is it? In this case, it's all the way back here. These peaks were close enough that with the market looks sideways and choppy to the system, and so it says, okay, you don't get to go long now that you're outside the value area. All right. Inside the value area, we don't do that. Inside the value area, we're assuming that the recognizing where the point of control is and staying out of that area is sufficient. All right. And if there's a low volume node inside the value area that's far enough away from the point of control, then we'll take a trade there regardless of what the wave delta chop stuff says. Okay. But when you get outside, we want to use that. We want to take advantage of that logic to keep us out of trouble. All right. We'll see more specific examples of this as we move further in the week. On this particular day, we stayed in or near the value area quite a bit. I want to point out that. So if you'll notice here, we're using the 45 tick model because things were pretty volatile. But we found the exact low, and we found the exact high. All right, so I really like what I see there. There were predictions here, in here, all right, that came back, don't do anything, all right. You would have liked to have seen a long in here somewhere because the market's going to go higher, but you can't tell that, right? We don't know what's going to happen, so that's the whole point. Is the machine learning system will make that prediction for us. All right, and what we're doing here is making sure that the location that we're choosing is sound, and I just really like what I see here. Here, this is a little bit later on, you're actually sort of rotating now, bouncing off the point of control, and you get far enough away, and there's a low volume node right there. And so that's why these go orange. This says get long. It's the right thing to do. It's a little too volatile. We get stopped to the tick right there. Okay, so you can see how it's working. Inside the value area, I'm going to look for low volume nodes. At the edges, I'm going to look to make predictions. And then when I get outside the value area, which we haven't seen yet in today's session, I need a low volume node before I'll do anything. Okay. Let's see. So here, this is a good example. We finally break out here, okay? And we pull back. On that pullback, you're close enough to that value area high that you get an orange bar, and there's an opportunity there to get in. You also had the opportunity as you crossed through in here. Okay, so the system's making predictions in here, looking for something to work with. You then take off too quickly, all right? And then right there on this bar, a low volume node forms. Okay, so now I need to get near that, or the value area high has to advance. before I'm going to make any kind of trade. And so what happens is we pull back to it, and that's, this is where you see the bars go orange. I start to make predictions. Now we're using chop avoidance. You see this, you see the blue and purple striping. So blue means I can't get long, and that's because it sees this. All right, it sees that and goes, that looks choppy to me to the high side. You got to deal with, you got to get far enough away from that resistance or break through it before I'll do anything. And then the same thing happens here, low and low. Now it looks choppy to the downside, and that's why it goes purple. So that's red and blue together making purple. So at this point, I'm not taking any trades until I see something that is looks a bit better. We get up to here, and now a low volume node forms there. So this is all, opportunities to enter. You can see it's exactly the right place to be. This is why I'm so interested in this. This is exactly the right place to be predicting. The market's topping out here. As a human, you could look at that and see those three peaks and see that head and shoulders and go, I really, really, really want to see something here. And then it travels back down. Okay, so the key things here are with this chart book, with this approach, when we're inside the value area, we're paying attention to how far away we are from the point of control, and we're making sure we're far enough away before we do anything. Okay, and we'll only do something at a low volume node, meaning not a lot of volumes traded at that price level, or at the edge of the value area. Okay, those are the two cases. There's no chop avoidance. When we get outside the value area, then when we either pull back to the edge, we'll make predictions, or at new low volume nodes that form, we'll make predictions. But we now have the option to use chop avoidance. You don't have to use it. You can turn it off. It's the same as before. Just avoid chop 0 or 1. Okay. Logically, conceptually, it makes sense to me to turn that on when you get outside the value area. The difference here, and this is really key to understand for those of you that have been using the chop avoidance, the difference here with this chart book, with this 0818 chart book, is that when you turn on chop avoidance, that means avoid chop outside the value area. In fact, let's make that really clear. Outside VA. Okay. Inside the value area, chop avoidance, it's ignored. Okay, it's not part of the formula. Why didn't you get a fill at the 213? Okay, so Larry, the order is placed one tick above. That's why. So you can get that trade. You just got to be more aggressive. So remember, that's controlled right here, limit entry offset of 1. So you can set that to 0 or -1, and that'll set the price. It basically, it says, give me the price level, subtract 1 tick, and place the order. So the market just doesn't come back, is why I didn't get filled. I have members that use 0. I've just stuck with 1. It's painful. And your dilemma is that if you may find that you get stopped out to the tick because the market will pull back up to that little resistance level that's been set. Okay, one of that. Let me. This is in the middle of a replay, so let me turn that off. Stop that. One of the problems with this is that the replays take just an agonizingly long time to complete now. The volume profile itself adds a fair amount of processing. And then my custom study, the TRT low volume nodes, makes it even worse because there's no way to capture the historical low volume node from the native Sierra chart study. So we had to write, in order to do this, we had to write our, we had to duplicate the volume by price logic in a study to find the low volume nodes and then plot them. Okay, so it takes about the fastest it goes now is like a normal chart running at 10x speed. So we normally run these at, we'll run them at 1,000 times faster than normal, but now you only get 10x. So just plan accordingly is kind of my point. Kick it off before you go to sleep, and then you'll have some results in the morning. It makes it much more difficult because it's harder to do the much more thorough back testing that I'm used to doing. So Larry's pointing out that you can change the system to not even do a limit order. You can change it to just do a market order. So instead of changing the limit entry offset to 1 or 0, you can alter it to place a market order. I don't recommend doing that. If you want to do it, you have to email me and I'll tell you how. But that would be the other way. You'll never miss a trade if you do that. You'll potentially get horrible fills is the problem. So that's just the trade-off that you make as a trader, right? Okay. One question I have for the group is, I have this when you're going to make a prediction coloring orange. It doesn't have to do that. It's just what I was using for debugging. If there's another mechanism for displaying that we're going to make a prediction there, let me know and I can change it. You can change it too, for that matter. But sometimes there's a group consensus that is like, why are you doing it this way? There's a much better way. And if that's present, then tell me and we can do it right now. As it is, the study that governs whether you're going to make a prediction is the same study that's coloring that bar orange, and that's make predict. Okay, and so you can go in here and change this to whatever you want. I'm using color bar candle fill. So if you want to put a dot there instead, so you still get a green and red bar, that's very easy to do. All right, just change it to whatever point on low, like that. All right, and then that'll change it to however you want it displayed. I'm going to leave it at orange because that's what I've been doing, unless there's an obvious choice. Something obvious that someone points out, or someone come up with a really cool way to display it and then share it with me, and then I'll change it to that. Okay, so make predict is we're going to go over 3 studies here. One we already did, which was the TRT ML predict. All right, so you've got a new option there. The other one is this make predict. This is the study that says that chooses the bars that you're going to make the prediction on. So if you look in here, this looks very simple. It's actually built on other studies that are building up the complexity of that choice we've talked about. So again, if you think it through for a second, hang on, let me change this back to my bars. If you think about it, it's I'm near a value area high, I'm near a value area low, I'm near a low volume node, I'm far enough away from the point of control. Those are all the criteria. And so there's a series of studies actually that build up that logic that are all listed before this make predict. You can see them named. There's low volume node, we're going to talk about in a minute. That's my custom study. Then this is near low volume above, near low volume below. This is both of those together. This is near value area high. All those combined create this make predict. All right, so if you want to change the logic for you personally, this is where you're going to go do it in Make Predict. This is where am I going to make a prediction? Okay. So let's look at the TRT low volume nodes study. This is a new custom study now. The start time needs to match what's in your chart settings. Okay, so it should be, for me, that's 1:30. That means 1:30 yesterday is what that means. So if you go look at your chart settings, the evening start is, I have 13:15:01, but really the evening start is 13:30. We don't start trading until 13:30, 1:30 Pacific, 4:30 Eastern. Okay, so that's why that says 13:30 in the low volume settings, or the TRT low volume node. You'll also notice on the volume by price study here at the very bottom, the one that's actually drawing this volume profile, it has a start time, and they need to match if you want them to line up. Okay, so the key here is that that's in your time zone, and it is the electronic open, the open time of the electronic session the day before. Okay, it's not 6:30 in the morning Pacific. It's 1:30 in the afternoon the day before. Okay, so what happens is the electronic session opens up and trading starts, and then London opens up and trading continues, and by the time 6:30 rolls around, by the time the cash session in the US opens, there's actually enough volume there that you've got a profile to work with. And then either 5, 10, or 30 minutes later, we start placing trades based upon the profile at that point in time. Okay, so 13:30, the start of the electronic session, the day before. The end time is 13:15 today, right? The end of the electronic session. All right. Anything else in here we need? But the low volume node say doesn't need that. It knows when the session ends. So if we go back to here, you've got sensitivity and you've got start time. So sensitivity is how many price levels do I look at in order to find a low volume node? All right, so let's talk about that for a second. So if you look at the current volume profile that's on screen, this is this one right here. So we're going to look at this here. That's very obviously right there a low volume node. You can see the profile. Kind of doing this business. Well, the sensitivity means how many price levels up and down do I look to find a low volume node. So if I make that number bigger, I'm going to get less low volume nodes. It'll use this bigger span of prices and find the lowest one in that span. If I make that number smaller, I'm going to get more low volume nodes. It's going to get noisier. So 20 just happened to be what seemed to be good, right? It's the kind of thing you'd like to run a zillion tests on to find an optimal parameter. But 20 is what I am using here. And again, it needs to match. It doesn't need to, but if you want it to line up to the volume by price study that's printing, then they should match. Okay. I'm not actually the volume profile that's drawing here. I'm not actually using it. You could remove it and everything would still work fine. I just like to see it. The TRT low volume nodes is tracking the low volume nodes for me, and then the other study that's doing the work is called volume value area lines. This is a native Sierra chart study, and it's drawing these the point of control and the value area high and low. Okay, and the key thing here is that draw a developing value area line, which means give me the lines as they form. Don't just give me the latest one. Okay, so this is why we get a changing line. Otherwise, we get just one line that represents the latest value area. All right, so you don't want to touch any of this, but basically it's just looking back one day. So just for the current day, 0.7 is the value area is 70%, which means 70% of the trading has occurred between these two lines. Okay, this is kind of the standard number that we use. That comes from statistical analysis of standard distributions. And nothing else you should have to change here. If your chart settings are correct, this will be correct. All right, so this is kind of the key. You want to make sure that your chart settings are right. So this needs to be the US cash session open, and this needs to be the electronic session open. In this case, so technically speaking, 1330. No trading occurs between 1315 and 1330, so it doesn't matter that I had it at 1315.01. This would be more technically correct. Okay, so these are the keys, right? That's your cash session start time, and that's your electronic session start time in your time zone. You're going to have to change this when you get this. In fact, there's so many places now where the times have to change, and I need to list them out for you all because it's gotten complicated now. I'm looking at questions, of which there are none. Okay. So when you install this, that's the kind of the key thing to do, is go through and change all the time settings. So I'll work diligently to give you a little checklist of all the places where you got to change that. And it is a little it's a little tougher now because there's a lot of studies now compared to before. There's a lot of studies that are needed to calculate these locations correctly. Okay, so everything from study number 2 down to study 16. So 15. It's taking 15 studies to identify the location that we want to make a prediction at. Okay. So it looks a little more daunting when you come in here and go, I need to change something, and I can't find it. All right. All right. So we covered volume value area lines. We covered low volume nodes, and we covered the changes to ML predict. Let's review that again real quick. All this is the same except that you're now pointing at the make predict study here in user defined prediction study, and you've changed this setting to with TRT. Okay, all this is done for you, but just for your own, so you understand how it's all working. And then the only other change is in the spreadsheet itself. Okay, so in the spreadsheet, this spreadsheet is different because of the change in logic for chop avoidance. So in the current in the 0618 spreadsheet, if you turn on chop avoidance, that means all the time we're always paying attention to whether or not the system thinks that it's choppy and staying out if it does. With this 0818 version, and it's not just 0818, it's, if you look at the naming convention, it says VP, VA, WD, CA. VP is volume profile, and then VA is value area. So value area wave delta chop avoidance is what I'm trying to point out here. So this spreadsheet is aware that there is a value area involved now, and in the buy and sell entry formulas, it won't enter if you have chop avoidance turned on and it shows choppy and you're outside the value area. If you're inside the value area, it doesn't matter. It's just like this was 0. Okay? So this is the key thing to understand, probably the major difference that's going to cause people confusion. Inside the value area, we ignore chop avoidance, regardless of what that setting is. outside the value area, this setting applies. Okay. So I tried to make that explicit by changing that descriptor right there. Avoid chop outside value area. Okay. Again, what we're trying to do there is recognize that this exact case right here, this exact case is what we're trying to protect ourselves from. You broke out. Okay, that's fine. You pull back. That's fine. We want to be making predictions on those pullbacks. But if you start to build volume, then we want chop avoidance to kick in. Actually, I chose a bad example here because you're right at the value area low there. This is better. So here, we broke out, okay, but then we start to go sideways. You can see the sideways business here, here, oops, that's the wrong one, here, and then here. And so very quickly we go, okay, I won't take any more shorts because of this choppiness, so that's why it goes red. And then because of this here and here, all right, well now I look choppy to the high side, so I won't go choppy high either. That's why it goes purple, because the blue and the red are together now. So we're trying to protect ourselves from this case where the market breaks out and then basically it's going to build a new point of control. It starts going sideways. All right. If you don't want to do that, just turn off the chop avoidance, and then it'll just take trades at any low volume node out there. Okay, you do not need to update Sierra chart to 1785. In fact, you should not do that. There's very clearly a bug in 1785 that affects the spreadsheet. Thank you, Larry, for reminding me. So a bunch of users last week reported that this column is just suddenly disappearing. Nobody knows why. Tickets have been submitted to Sierra chart support, and we're waiting to see what happens. I checked with the programmer to make sure that he compiled the DLL with a lower version, and his version is in the 40s, so everyone should be fine. You don't need to update SC. And in fact, if you have upgraded to 1785, roll back, because people are reporting problems with the spreadsheet. So if you need to do that, it's right here. Install previous version. Okay. In the help menu. So those guys, the Sierra chart guys, are all over this kind of issue. They've kept the previous version you had, and you can roll back to it. Other questions? If one. Yeah, Russ. So Russ is pointing out that if I'm not using that volume by price study to remove it during replay, I didn't see a difference, Russ. So you're welcome to do it. But to be clear, this study at the bottom, VBP, which is the volume profile study, is not needed by the system. It's not used. You can tell in part because it's at the very bottom. It's just displaying that profile. But again, Russ, I didn't see a change. I think most of the problem is that the calculations that are needed to identify the low volume nodes in real time are enough that it's slowing it down dramatically. There's not an easy answer there, other than there's not an easy answer, period. All right. The only other way to do that is if Sierra chart changes the volume by price study such that you get a developing low volume node lines. Would be very hard for them to do. That's it. That's the only thing I can think of. What I need to do for me personally is I need to write the program that does the replay. I used to have one when I first started this, but now it's gotten complex enough. I need to redo it. I need to rewrite that from scratch, and I just haven't had time to do it because I've been working on this. So if I do that in Python, a replay of 3 months takes like 10 seconds, and this is not an exaggeration. That's how quick it is. But in Sierra chart here, it takes longer. I like the Sierra chart replay because I'm guaranteed that I haven't made some bug error in my coding. That's the thing that worried me the most about, and it's why I switched to replay also. In part also because you want to be able to do the replay and see the same results that I'm seeing. So, but now with it taking so long, I think it's time to sit down and write it myself. It's not hard; it just takes time. It's just nuts and bolts programming. It's pretty basic stuff. Okay, so no other questions. All right, so this will go out tomorrow. The key thing here is what I would do is do it in simulation for a week. All right, it uses the same model. So you can just, you don't need to do fancy things, starting up new, multiple servers. If you are going to run this, you need to run the new server. All right, so you'll need to download that and install it. That's very easy to do. You just replace that executable with the new one that says exactly what you see there, 0730. All right, if you try to run it without this server, it'll just complain. All right, the old one, everything will work fine. So Larry's asking for results comparisons. What I see, Larry, is that, and again, it's really difficult because the replays take so long. So I'm not as comfortable as I'm usually when I release something like this because I just haven't been able to do 3 month tests like I normally do. But what I see is that it is slightly less to more profitable than the regular mechanism on half the trades. So one way to test it that's interesting is to when you get your new model every week and you back test you last week to make sure everything's working, do the same back test for both and you'll see what I mean. The tests that I was running were from, I built models through 0607, which is the end of the March contract, and then I was testing the U contract, and that's what I saw. I saw slightly less to slightly more profitable, but on half the trades, and the amplitude is lower. So there are days where the normal method just kills it, makes a lot more than the volume profile, but then you have a lot less of these days where you're taking a max loss. So that's what I'm seeing. So that's what I mean when I say the amplitude is less than the peaks are lower, but the lows are the valleys are higher also. Okay. I'm looking at questions, and I'm going to take a drink here because my throat's scratchy. All right, so that's it. So, a new server, new chart book with a new spreadsheet. All that's going to get uploaded. I'll provide as detailed instructions as I can, mostly around changing your time zone or changing the times, making sure you get all the places. Unfortunately, there's a lot of them now. Other than that, my recommendation is start next week just normal and set this chart up in. So that means you have to install to do this. You have to install the new server, and then set this chart up and run it in Sim. All right, to make sure you got it right, and then watch my chart compared to yours. Okay. The way that it would be different is if your volume profile times are set wrong or set different, then the profile will build differently and the low volume nodes will build differently, and the value area at highs and lows will build differently, and as a result you'll get different locations. All right, so that's why it's kind of key. Make sure your chart settings are right. That's the most important thing. And then the time setting for the TRT low volume node is key. Any other questions? No. Okay, so last chance for questions here before I get to work here. So models will come out tomorrow like normal, and then this stuff will go out. Will get uploaded also tomorrow with instructions. It'll actually take me longer to do the instructions than it will to upload everything. You know what, though? I do have one question for you guys. This chart book is set up to trade two contracts, and I suspect that I should change that to one for the upload. Any opinions one way or the other, gang? Just type in 1 or 2. I've always uploaded single contract trading. I'm laughing because it's evenly split. Oh dear. All right, so given that it's not overwhelmingly 2, it has to be 1 then, because I can't accidentally have people that are only trading 1 contract accidentally trading 2. All right, so that decision is made. So you'll have to make that adjustment as well. That's funny. Looks like half of you are now trading more than 1 contract. All right, any other questions? Looks like no. Going 1, 2, 3. All right. That's it for today. Then I will. I'll get this posted for viewing, and then get to work getting all this ready for you guys to download.